Polygon has had an explosive rally today. We're almost up 9%, and we're seeing similar across the entire crypto space and even many sectors within equities, stocks, even some metals, things like that. But that doesn't necessarily mean that we're out of the woods yet. As a matter of fact, we have quite a downside setup in place at the moment, but we could get a last-minute hockey stick save to possibly salvage what could be 5 waves up for a leading diagonal. This is our 30-minute chart, linear chart. And this is what we have seen since our low was hit on January 24th, right around 131, 132, right in that range. We have what looks like 3 waves up so far, got an A wave, B wave down, and a C wave up. This could also be a 1, 2, and a 3 for leading diagonal. And that would presume that we are done with the 4th wave pullback, that we're about to rally for a higher high. We have a lot to prove for that count, but this is what it would most likely look like with our 1, 2 in place as a part of a leading diagonal and not an impulse. And the reason for that is that we have, well, our internal wave structures look corrective. These don't look like impulses. The first wave and the third wave, I'm actually going to reposition these so you guys can see a bit more easily. And especially here, it looks like an ABC up. And well, we don't know what the 5th wave would look like if we get a 5th wave. So that and the fact that this pullback has fallen well below what we were calling the 1st wave. So these are all hallmarks of a diagonal pattern, which is less bearish than having an ABC zigzag up, but it is also risky because it's a bit ambiguous. This could be ABC up. We may already have our 1st wave down actually. So the primary count at the moment would be our blue count, which is saying that we are done and that we should have a 5th wave back up. So that would be a 1, 2, 3, 4, 5. However, this red count has gained in probability because of how deeply we have pulled back. As a matter of fact, we have pulled back down below the lower trend line. And well, we're going to see how this bounce looks. So we have to have a higher high near this trend line, maybe a little higher than that to give us any shot at completing a leading diagonal for our 1st wave up, small wave. Otherwise, this is definitely looking like an A, B, and a C wave, with this potentially being the 1st wave down of a larger impulse to complete our overall crash setup. So that is what things look like in the short-term picture. Long-term picture, big picture. This is a log chart, daily chart. Things haven't changed. The chart remains the same, and we still have our blue as our primary, and that is calling for either that we are completely done with this pullback or that we have a little more to go. The red would tell us that we're going to have more of a standard pullback. You would expect a deeper pullback if this really is a 2nd wave. So this would be a very good thing. It would make us more confident that we have a sufficient pullback for a 2nd wave, and having that bowstring stretched lower will help us launch this thing higher once we're done with the correction. So that would be a good thing. It's not something to be worried about, but if you need to take some chips off the table, may not be a bad time to do that, because we could fall from about 180 all the way down to 62 cents or less. So that could be what, maybe 2/3 of the value could be lost if you hodl through it. Otherwise, look at it as a buying opportunity. So what are the internal wave structures telling us? When we zoom up on this thing, and I would like to note, this chart is available, so please check out the link below in the description if you'd like to follow along. We have what looks like a clear 3-wave structure down. So you have an A, B, C. I'm actually going to zoom up a little bit more to make it a bit more clear. Again, A, B, C. It could be a 1, 2, 3. So I'm going to redraw this thing. So that could mean that we have another 5th wave down lower to complete the structure. So if you have this 1, 2, 3, 4, 5. Now, the problem with this idea is that this perspective is that we would expect a C wave down. So that should have 5 waves. However, we didn't go low enough. This is a very substandard C wave if this is the A wave. So that leaves me scratching my head a little bit. We've also had some overlap between the 4th wave and the bottom of the 1st wave. So if anything, looks like a diagonal. So we can't go too much lower on just this pattern alone. So that increases the odds that this pullback may actually be an A and a B so far. So if I draw that up there, it looks kind of like this. You have your 3-wave A wave down. We're in the middle of a B wave bounce, which was clearly 3 waves, as we saw on the small picture chart. And maybe our C wave takes us down to here. If that's the case, that would be a zigzag. It would be a little unusual to see a zigzag down for, well, a C wave. That would leave us with a basically a double 3 or an expanded flat double zigzag, something like that. More than likely, we would probably have 5 down one way or another. So if this is a diagonal, maybe it would look something like this. Maybe this is the 1, that's a 2, 3, 4, 5. Not clear. So we need to hold our supports right now. And like I said, I've set this support up kind of arbitrarily, kind of not. This is set up at the was the 50%, I'm sorry, the 76.4% retrace of what would be the first wave in blue, the first subwave. If we break that, like I said, it's kind of a gray area where the blue pattern ends and the red pattern begins. If we break below that, very good chance for dropping in this box, in which there's a lot of equivalences, a lot of confluences. That is about where our 38.2% retrace would be. So that would be a minimum standard target for a second wave after a larger first wave. And like I mentioned, some of our fib extensions, based on what we've seen so far, do project down in that box. So there you go. That would take us into the 1.32 and beyond. Those will all fall in the blue box. So there is a high likelihood of falling there if we don't quickly reverse and make that higher high. So let's look out for that thing. If we see that, we would expect to see a pretty deep retrace. Cannot break the low that we already hit on the 24th of 131. That would be the time to buy your pants off. But until we see a little bit more validation, this red pattern is still hanging on. Things are still a bit precarious. We have a bit more room to fall in Polygon. Other cryptos, there's not as much room below, so we may not fall as hard. Maybe we have a kind of a truncated C wave to finish this up. Not totally sure. Where does this leave us big picture? Well, as I mentioned, Polygon has a short history, first of all, because this thing starts in 2019. And if this is a second wave, it took quite a while to get things going. Other than that, though, all of the internal subwaves did follow standard extensions. So our third wave fell between the 1.32 and the 1.618 extensions, as you see here. Small but shallow fourth wave, cuts the mustard there. And then we hit the 2.0 almost exactly. So this looks like a complete impulse. After a complete impulse, you expect a pretty sharp pullback. We haven't gotten one that's that sharp. So as I mentioned before, this blue box would be a buying opportunity. So that leads me to the whole thought that it's time to be greedy when others are fearful. Yes, we're seeing a bounce today, but there's still a lot of fear in the cryptos, in equities. Doesn't mean you have to start buying right now, but have your plan ready. If you are planning to buy, get ready. When this thing sinks, you're going to start feeling a lot of fear. That's when you are, oftentimes we feel least excited about buying. We feel terrified. It doesn't feel good. And that's kind of the trick here. When we're in that box, it's going to feel awful deploying your cash, and that's the time to do it if we get there. So I'm going to be updating you guys on where we are in the correction, if we're seeing a reversal, if it's time to buy it, and I'll be releasing some videos on how to allocate your crypto holdings, because a lot of these cryptos have great return projections, but many, like Polygon, are high risk because of short history or an incomplete pattern or vagaries within the structure, anything like that. So don't forget to subscribe so you don't miss those. Until next time, thank you for watching and happy trading.